All right, anatomy of the trade desk, quite a lot of, you know, latest price movements here. For those of you who are in the swing position, that probably is a great, indication of what you were expecting to see. We've talked about this type of bar where it's a big significant bar, the bar that actually overcomes, previous points of the resistance out of this area. We identified this as kind of like this long-term oversold condition, and we needed to see some kind of reversal action. Before that, and this is something that November Special is going to allude to in the third session, we had a lot of buying, and then we had absorption of that supply that was available at this level, and then we have a synchronicity of the effort and the result. It's this latest bar, today's bar, that is probably one of the most attractive bars for the actionable points. I also like here, and this is from Arvin, the PNF counts kind of suggest to us that we're going to get back into the long-term resistance zone. So that makes a lot of sense. What do we have here? Reversal 1. I see. Okay, 21 times 4. All right. I wonder, Arvind, if we would take, and lately what I'm doing is I'm kind of trying to see where the trading range is to the most significant number. So that's 200, and I would take 1% of that. So that would be for us $2. And then maybe to see for the box size. So here we have $4, so this is twice as much. And just to see with the $2, what kind of count we're going to have. Something tells me that we might actually overcome the high if we do that. All right, guys. Well, what are your thoughts here on trade desk? Would you go into this position now, especially for those of you who were thinking about maybe a distribution, a redistribution? How do we look at this position now? I mean, obviously, still relative strength is not there, at least fully. Price is showing a lot of promise. Would you become buyers here? Let's see it. Maybe we should just conduct the whole poll. Are we buyers here or not? And you can say yes or no. Okay, let's go through this. Yes, 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 yes. Yes again. All right, so other yeses. Okay, awesome. So I'm going to consider this as a buy bar for us, and then the stop loss, I would assume that's going to be below the selling climax. I don't think that we're going to go for anything else, but we also could go slightly below what we think could be a phase C at this point. All right, so homework, follow this stock now because we're in the position, and let's analyze it. So send me your analysis of this stock, whether bar by bar or whatever you guys see there. If there is some kind of interest, so let's to put it on the chart, send it to me, and like with Arvind, I could put it into the slide. All right, great. Another question. Another bias game, previous, in your explanation of this bias game, the green circled reaction, you advised that this reaction is bullish as volume is falling. During my assessment, I saw this as an ease of movement to the downside, which I read as bearish. How does one tell the difference? Okay, a little bit of the repetition here, but very useful repetition. So we look at the reaction, and then why would we say that it's not an ease of movement but a bullish reaction? An ease of movement to the downside would suggest a commitment below some kind of support. Do we have that? Well, here's our support. We don't have commitment below that. Here's another support. We don't have commitment below that. So therefore, intention fails, and we don't have an ease of movement. Well, what do we have? We have a high low. We have supply diminishing here, and that only suggests that supply was available at the higher levels, but at the lower levels, it's actually consumed. So there is an absorption at the higher level that has happened with this price action. So now we would be expecting that probably at the same level, we're going to have supply again. So that's the difference there. Ease of movement, we're going to have a commitment. We don't have it here. And then on, let's say, weak reaction, we would just have deterioration of the supply. So it would be a weak reaction for the supply, and we see that, through the volume and through the structure. Is an ease of movement to the downside applicable if we do not go past a support level, but go below a significant bar to the downside? Yes, that's exactly that. We're looking, you have to think in terms of the magnitude, right? So if you have this move that contains multiple bars, so then we would be definitely looking for the support area that would be defined also by the reaction of previous reaction of the same magnitude. So we can't just say that because this bar has been reversed, then there is an ease of movement. Relative to the last commitment to the upside, there is a ease of movement. And it's not even an ease of movement. There is an increase of the supply, and the price commits to the downside. So effort increases, result increases. There is no ease of movement on diminished result, and yet was the commitment. That's the difference. So don't mistaken, the magnitude of different reactions was just the reversal of the bar in the specific swing. All right, great. Now let's look at the time, 4:20. Okay, we actually might be slightly ahead today, so that's great, good pace. So we went through the first two stocks on this exercise, stock number 1 and stock number 2. For the first stock, we said, well, we are probably in some kind of climactic action. From here, we would be expecting the price to go aggressively up, slightly above 42. That would be our interpretation. Stock number 2, we said, is very interesting. It has a lot of strength, and we've defined strength throughout the whole trading range. We thought that this was phase C. Even this looked bullish, so we said that we're going to come in and buy, and we would be expecting an acceleration from here because of how actively supply has been observed in this area. We see that the volume has increased. There is a lot of institutional presence. All right, so now let's go to stock number 3 and stock number 4. Okay, and before we actually go to stock number 3, this is a really good question from Arvin, so let's go through this. Arvin is asking, when evaluating a stock versus industry group, so here's industry group and a stock, which is more appropriate, structure analysis or percent difference analysis? And I'm assuming, Arvin, that percent difference is going to be what? It's going to be kind of like the same idea behind the relative outperformance, because the relative performance is going to be based on those numbers. What's the difference, let's say, between the move to the downside in one asset relative to another. And we would want to, see relative to each other what moves further down. The way how we compare, we usually do a comparative analysis based on the structure. So that would be important to me. But then if you have a relative strength line, then definitely, consider applying it, to your chart and seeing what the trend of that line is. And I wonder how you would interpret this here. So let's go right away to stock number 3, and let's talk about this. And let's talk about the comparative strength. I'm going to identify specific points, significant points, and you guys just write it down to me. You could just write down one letter, S or W, for strength or weakness, or stronger or weaker. So at this point right here, is the stock stronger or weaker than the group? Stronger. At this point, stronger or weaker? Weaker. At this point, stronger or weaker? Weaker. At this point, stronger or weaker? Weaker. At this point, stronger or weaker? Stronger. At this point, stronger or weaker? Stronger. Let's stop here. We are probably taking either this low for the group, and we see how the price dropped here, or we are taking actually this significant low, and we're synchronizing it with the group, and then we're seeing that on the stock, the price came to the same level. For the group, we actually dropped from that level. So the group is weaker and the stock is stronger. Okay, next one. This point right here, stronger or weaker? Stronger. This point right here, this low, stronger or weaker? Stronger. This point right here, stronger or weaker? Stronger. All right, let's do this point right here, stronger or weaker? Stronger. This point right here, stronger or weaker? Stronger. And the last point, stronger or weaker? Weaker. Why weaker? Look at this, high, low, and here we're just horizontal. So definitely weaker. So what is happening with the comparative relative strength? We've been in the leadership stock, and then we go through the period where the stock is of no interest to the investors, especially in this area right here. So there is some selling that is happening. Excuse me. Some selling that is happening. We see that supply is going up, is going up, is going up. Someone is selling, and then someone is out of position. And that's why price kind of drifts up, has some supply again, and that leads to the change of character, which is this reaction. Okay, well, there is no supply after that whatsoever. Actually, there is more demand, really good rally. So we are seeing that after this change of character, there is more bullish bias. And then this last portion, this is something that we want to decipher. There is a little bit of the increase in effort to push the price up. Overall, what do you see for the result? Are we expanding result, increasing result, or are we decreasing result? Result is increasing to the downside, or result is increasing to the downside? All right, so everybody is saying decreasing. Okay, great. Yeah, how's it decreasing? Well, we had previous reaction of the same magnitude that was quite significant, and here we just don't have it. Maybe this, much smaller. What kind of selling do we have? Maybe this bar right here. That's the most that we get. This is more aggressive. And then a higher low relative to the previous area. So this is also a really good result for bulls on the slightly increased effort. So slight increased effort to push the price down, inability to do so suggests presence of buyers at this point. And we kind of could see this. The price falls and then quickly goes up. So there are some momentum buyers that are present there as well. So now let's deal with the last maybe week here, or that big bar. How would we interpret that? Does this bar changes the bias? Let's answer this question first. What do you guys think? This big bar to the downside with this volume signature, does it change the bias from up to down? Okay. Do you need more time to think about this, guys? All right, so we're in two camps. Some people are saying, no, it doesn't change the bias, and some people are saying, yes, it changes the bias. All right, so how would we change the bias here? So one of the suggestions here from people who are saying, yeah, the bias is changed, is an ease of movement. All right, well, we just went through this. We definitely committing to the downside. Do we commit below a significant support level that would tell us that this is an ease of movement, or are we just talking about a reversal of the swing? We need to commit below somewhat of the significant level. And here we're just stopping, right? There is so much aggression with which the price moves, and there is some volume increase here, but it's not that big, right? So we had supply coming in at some levels that were even more impressive before that. This is the supply that is coming in. This is the level of the supply that comes in on that particular bar. And there is no commitment below, so no result. Therefore, it's not that threatening. And don't forget what we're seeing here. Strength, strength, strength. Everything is strong until this point. Remember that signature on phase C where we have institutional buy-in throughout the whole structure? And then we have a short-term weakness that usually would identify phase C. And usually, because of that weakness, investors are going to see some value here and they're going to be more drawn to this stock. Oh my gosh, am I giving you the correct answer to this whole puzzle? I don't know. Well, at least it looks to me like, there is a lot of presence here after all of this volatility. And now, some value, and I'm thinking I gotta get into this stock. How? Well, basically anything on the way up, I'm taking. All right, well, let's look at stock number 4 before we go to the solution. All right, so we probably should do the same. Let's start from this low right here. Is the stock stronger or weaker at this point? Stronger. How about this point right here? Stronger or weaker? Stronger. Stronger or weaker? Stronger. Stronger or weaker? Stronger. Okay, next point is going to be this close right here versus this close. Stronger or weaker? Stronger. Why stronger? Look at where it closes relative to the previous significant low. So we're just really close to that low. And then look at where it closes on the industry group and look how much distance is between that close and that support, or now acts as the resistance line. So the stock is still stronger. Wow, what a pattern, right? The stock is stronger. There is a big demand tail right here. Looks very much like a shakeout, lots of volume signature. And it all comes in the stock that is actually stronger than the industry group itself. We definitely should be very cognizant that the group is actually in the downtrend. And we see lower highs and lower lows. But we also should recognize that something is going on with this group. There was an attempt to stop, so probably this is a climactic action, automatic rally, secondary test, phase A. Then there is a lot of time that the price has spent in phase B in the upper part of the range, and look for the stock as well. This is one of the most favorable patterns that we could have on the structure, where phase B suggests that institutional trend followers got into this position. Now this pattern, unfortunately, will always resolve itself in the double bottom and the retest of the previous low, with some of the capitulation that we're going to see from those institutional trend followers. They will be thinking that they didn't get into the position at the correct time. So they will give up their shares. From here, liquidity will increase and the value investor is going to buy. That will support the price, and from here the price will go up with more synchronicity on the result. So therefore, a very strong stock in the group that might be also experiencing, some buying, the group probably will follow the stock. This is a leadership stock. So this also looks very attractive. So therefore, when we come to the decision slide here, I want you to look at these 4 stocks. Again, consider what we said about those stocks and tell me one stock, the one that you would want to buy at this point. Which stock do you think will outperform all of them? I'll give you some time to think about this. All right, let's see at some of the answers that you have. Okay, so stock number 3. Guys, by the way, I might have said something, but about stock number 3, I've just seen a lot of kind of like bullish characteristics here. I like the structure. I like this weakness at the end. That's great. But also, I like this stock too. Like stock number 2 appeals to me. Stock number 4 appeals to me also, for different reasons. Because if this is phase C, I want to be in it, relatively early. I think that first we're going to have some kind of, minus sign of strength, maybe like into 125 area, maybe 130. And then we'll consolidate and then we'll go up. So initial long-term position could be established here. So you have to think long-term, which stock could potentially outperform, in a more meaningful way. All right, well, everybody's going with stock number 3. Let's see what happens. All right, so stock number 1, we said that there's going to be that first initial reaction above the preliminary support high. Happened that way. So nice. We could have here a trade. If you're a swing trader and you're thinking in terms of the efficiency of how you use the capital, a trade, let's say from 35 to 42, which is 20% move in about what? Less than a month. So maybe like 3 weeks is actually quite effective if you are doing something like that. You could also find that probably in some other stocks here that you could see, especially this one right here, number 4, because this is a deeply oversold condition. And just recently I've been, tasked, to think about the benefit of switching between positions, to produce more velocity with which you generate the money. Now, this is a little bit crazy because you have to be extremely correct with your calls. Otherwise, that's not going to work. So I'm not actually going to, advertise this or talk about, but it was an interesting thought. So if we would be thinking in terms of the efficiency of making the money in the shortest period of time, stock number 1 and stock number 4 will be our candidates just because of the deeply oversold condition and the push up that they usually would have in a relatively short period of time. So here we have 1 month, and from 100 we go to about 130. So that's plus 30% in 1 month. We don't have that in stock number 3, although hold on, I might be totally incorrect. So this is what 14 bucks on the 58. So probably, yeah, also 20%. No, kind of the same. So this also would be very interesting. Okay, and then here we have, let's say, like 49 to about 55, $6. So yeah, not as much on the 50. Yeah. So that's okay. So stock number 1, 2, 3, and 4 kind of were presenting us some of the opportunities. And then again, why does this happen? Look at where we were, right? So short-term weakness defines a short-term oversold condition, doesn't it? Then oversold, then oversold. It's out of those oversold conditions where mean reversion traders come and they see that there is such a deviation from the fair price. They know that they could push this and create such an acceleration, such a momentum that will increase velocity really quickly, and then that will push the price up. And we see this in all 3 cases. We see it here with the continuation. We see it here. We see it here with continuation. Simon is asking, how do we, what is this? Assert a stock in the oversold condition? Well, that was my question to you guys, next question. But okay, if this is a question, I'm going to give you a hint. Out of these 3 stocks, 1, 3, and 4, I would be picking 3 and 4. As certain. Yeah, as certain. Okay. Why 3 and 4? Because there is a structure here, attractive structure, right? So we are in potential phase C in the stock number 3, and we are in the potential phase C shakeout action on stock number 4. So both in phase C has kind of like short-term conditions of weakness. And obviously, stock number 4, if we were faced with this dilemma, if somebody would come to us and say, in the next month or so, you have out of these 4 stocks, pick up the stock that is going to produce the largest result. You know, what kind of stock you're going to look for? You're probably going to look for the stock that already has concluded its structure, right? So phase C, and it's going to be in the oversold condition. John, I think this could be one of those scans, right? So phase C in the deeply oversold condition with bullish conditions. Phase C, oversold, bullish bias. And then both 3 and 4 are like that, 4 even more so because of the shakeout action, and it produces the largest return. So you could just create strategies just based on that. So how do we do this? We want the structure, and we want that oversold, and we want that bullishness. Okay, what else? We said that stock number 2 is very attractive to us long term because, and we were here, this is where the point of entry would happen. Because of a lot of things here, a lot of strength, a lot of buying in this area, structure is there as well. We are thinking that probably we've consumed a lot of the supply in this area, and the move to the upside, could be quite fast as well. By the move, we mean more longer term move. Here it is. So, and we're seeing that volume deterioration and the movement of the price. So let's talk about this a little bit. First of all, let's answer this question, guys. What do you think? Why is the volume signature going down? Why does the volume signature go down? Supply and demand both decrease. Correct. Why else? Less and less demand as price goes higher. Correct. Buying at lower prices. Well, Sharon, let me rephrase this for you. I think this is where we're seeing that buying, and this buying is all value buying, right? Because it's on the way down, on the way down, on the way down, on the way down, and then on the way up. Here's our value zone. This is where they bought in. And we're probably seeing the buying into this area right here. And then when we look at this area, what are we saying? We're saying that both momentum has increased and velocity has increased. And then we look at the continuation, and we are saying that in this case, momentum starts to decelerate. We don't have as quicker rate of change as we had between 49 and 55. It's smaller. So momentum will start to deteriorate. It will have some local jumps up, but long term it will start to deteriorate. And then velocity will reach certain level and will start to deteriorate as well a little bit. But still, it will be more sustainable than the momentum deceleration itself. And that comes because they have bought in this area and then they just let the price be, kind of travel on its own. They are not buyers anymore, but they're not sellers either. And that supports the price and its uptrend and ease of movement to the upside. Indeed, this whole area has multiple commitments to the upside, and yet it happens on the diminished volume characteristics. So extremely important to see that. Okay, what else? I like how stock number 3 has traveled, right? So we have increase in momentum and then decrease in momentum. Why would momentum decrease here, guys? What do you think? And actually, let me just go, I guess, to that particular stock. Let's just see it. Stock 1, 2, and then 3. Let's look at it with more details. Momentum was increasing. Actually, after this, it was slightly decreasing, but definitely in this area, if we're comparing this to, momentum is decreasing. Why would momentum decrease? What do you think? ITFs have bought at the lower prices level, lower price level already. Okay, yeah, they bought in. I mean, the value have been buying for some time. Momentum probably was getting in somewhere here. We don't necessarily see a lot of momentum there. They don't need to acquire anymore. Less urgent buying. Well, if they're getting in on the momentum right here, then they are just holding here, this position, right? So momentum players plus value. And as they hold to this position, at some point, some supply comes in into the market. And as this supply is being introduced, they're kind of consuming that supply. And this laborious move to the upside. Looks like a big feather. So some supply comes on profit taking. And they absorb this supply. So COR absorbs vertically. It's being presented, it's being observed. Presented, observed. Presented, observed. But there is no like a regional momentum push that we have at this point. Usually this type of development of the uptrend characteristics, where in the first phase you have your momentum buys. By the way, I was talking about this in the bow, character of the up move and of the down move, the structure of those, the characteristics. Then you're going to have vertical absorption. And usually when this happens, because momentum by itself, momentum has those absorption characteristics, you have the first zone where there is an absorption, second zone where there is an absorption, and you're definitely going to have the third zone that is going to be speculative wave, and it's going to have less supply. And it's at this less supply rally, this is where swing positions are going to be extremely important and where leverage also will play a big role. We want to have, the trades, the swing trades with a lot of acceleration, either in the first momentum zone or in the last speculative zone. We don't want to have, let's say, leverage positions where we have all of those gaps and big spread type of the reactions on increased volume signature in the vertical absorption period. That's just kind of like the whole structure here. And then what else? Let's go to our next slide where we have all of them together. All right. Now I want you to look again at these four stocks where they are right now and tell me which stock would you choose here to buy. We're continuing with the uptrend theme here. I don't see any violation yet. On the distribution side, none of them exhibit any distributional signs, in the last portion of the chart. So this would mean that all of them should go up, continue the uptrend. Which one would you pick out of four? I'll give you 20-30 seconds to think about it. All right, let's see your answers. So please type those in if you haven't yet. Okay, so we have not as many answers for some reason. Okay, should I give you more time, guys? All right, so maybe we'll stop here. So majority of you are saying stock number 3, and then a couple of you are saying stock number 4 and stock number 2. All right, so let me kind of like think about this really quick. Would definitely be thinking that probably stock number 1 is attractive at this point. That's number 1, and then stock number 4. Why am I choosing these two? Well, all of them are leadership stocks. All of them are bullish stocks. They're all moving in the same direction. All of them have had some causalities. I think that there are 2 points that we need to bring up here, for this selection, for the next selection. I think causality itself, right? So we've talked about stock number 2. We said here is one causality, here is a larger causality. Stock number 3, here is a large causality right here. Stock number 4, it had a causality right here. Now this causality has expanded. So quite a lot of causality right there. Stock number 1, we talked about no causality at this point, and yet now we could have maybe something like this, or maybe even this or this. So all 4 of them have enough causality to make big moves. Which ones made big moves and which ones did not yet? Obviously 1 and 4 have not moved quite substantially yet. So we would be thinking about these 2 stocks as having that potential causality to have much larger moves. At the same time, we want to look at the second thing. So we looked at the causality. And the second analytical piece that we have to consider, what is the short-term performance? Because the short-term performance will define short-term leaders. Again, if the goal was to come up with the stock that will outperform in the next months or 3 months, which stock would we choose? We probably would be choosing based on the outperformance, which will be short term. So where are we seeing outperformance? Well, probably in the last 3 months since August. Here and then here. Here and then here. Here and then here. And then here. Which stock, or maybe stocks, are stronger? Which ones are exhibiting ability to hold on the reactions and not lose a lot of ground? What would that indicate to you? Probably that institutions are not selling those stocks. And if they even do, that supply is being observed and there are successful tests. Whereas in some other cases, we might see some short-term synchronicity between profit taking and how the price reacts to that. It doesn't mean that the stocks are not gonna continue their run. actually, in fact, stock number 2 is probably experiencing a potential phase C. The volume signature is correct. And then stock number 3 probably is in a trading range of some sort. At least maybe there's going to be another attempt to retest or something. But stock number 1 and stock number 4 are in the interesting places where they've experienced very correct structural changes. And now we're seeing those changes, structural changes, resulting in the outperformance over, over the stocks that we look at. And they suggest that short term they're going to outperform. So 1 of 4 definitely would be on our list to consider. I would say that then out of these 2 stocks, 1 and 4, which one would you choose? Out of 1 and 4, which one would you choose? 4. Everybody's saying 4. Why 4? What is the reason? High in the structure than 1. Yeah, and there is this last rally has a lot of momentum behind it. This last rally that we have since September low has some momentum, but not as much. It still probably will outperform 2 and 3, but 4 looks very, very interesting and attractive. Well, let's see what happens next. Okay, so here we are revealing what stocks they are and the groups. So the first one is US Banks and a Citigroup, and this is in 2016. So we're seeing that structure, phase C, further grinding out, consuming the last point of supply, is suggesting that there's going to be an acceleration, and the whole group accelerates. That's after the election. So initially, this is something that we could consider as a short-term swing position because we see how the price could potentially accelerate and outperform. Stock number 2 was from the insurance brokers, Marsh & McMillan, MMC, and we said that it's not like it's not going to go up again. It's going to continue its move when we're probably in phase C. But relative to other stocks, it might not accelerate, as quickly. Stock number 3, we said at this point, probably would be in some kind of trading range, or at least it would retest first before going up. Ultimately, this was kind of the stock, to be in. Stock number 3, Align Technology from the medical supplies group. And that outperformance all started here. This was stronger. This was a really good momentum kick. So another point of entry at this point and on the way out, and look at how the price moves. But short term, it didn't outperform. And then stock number 4 was Boeing in aerospace, and we were right here. And from this point on, this was the stock definitely that actually outperformed all of them. And number 4 with all of this local outperformance, big cost build, a lot of institutional presence in this shakeout area. That was just a very good structure to be in, and then a short-term strength suggested further outperformance, and short-term look at how this swing into March is just producing such a great profit. So 135 to 185, 50% run during that time. And the whole group is also performing really well. All right. Well, I think that's it for today, guys. We kind of went through this really quick. Well, maybe we should stop here. All right. Yeah, let's stop here. So for the homework, obviously a bias game as usual. Look at the trade desk because we've opened officially, as a class this position. So I want your analysis as to what is going to happen throughout the week. And then I'll see you guys next week. Really good class. We are kind of covering a lot of ground, a lot of, some in-depth concepts. So it's definitely very useful. I'll see you next week, guys. Thank you so much. Bye-bye.